Hello, this is Angela Powerhouse Williams. I am the leader of the Lifestyle Changers team. And on this training today, I am going to teach you how you can implement strategy number one in my econ, and that is how to income shift. So we're going to show you how to correctly adjust your W-4 so that you can unlock the hidden cash that is sitting in your paycheck. My econ does not guarantee you will receive an increase in your paycheck by adjusting your W-4. Results will vary based on each individual's unique financial situation. When you hear us say that you can get an extra $200 to $800 a month, that's on average for most business partners or clients who join my econ. But what it is not a reflection of is how many allowances you are already claiming on your W-4, which could affect how much money you get. So we have some people that earn more than $200 to $800 a month, and then we have some people that may earn less than $200 a month. Also, you may be in a situation where maybe you owe the IRS, and because you owe the IRS, you may be have been writing certain allowances so that you get more of your money back, or maybe the IRS have a freeze on your W-4 form. So of course, everyone's personal financial situation will change, and we always recommend that you see a qualified tax professional if you are unsure about your form. Now, what is the purpose of the W-4? The W-4 is a form that you fill out so that your employer can withhold the correct federal income tax from your paycheck. Consider completing a new Form W-4 each year when your personal or financial situation changes. It is your responsibility to make sure that your W-4 is accurate. You want to update your W-4 every single year. Again, when you have life changes. So maybe you get married, maybe you have a baby, maybe you buy a home, or you decide to start a home-based business, which is why you partner with my econ. In every last one of these scenarios, you are qualified to adjust your W-4 form. What I do want to speak on is the exemption status. I have been meeting quite a bit of business partners and customers within my econ who have wrote exempt on their W-4 before. Sometimes people use the exempt status for different reasons. Maybe you get a bonus one time each year and you want to keep more of your money, so you may write exempt. Or you may be one of those people that write exempt for 6 months and then adjust it back to what your W-4 allowances should be for the next 6 months. And so what I want to do right now is I want to tell you what the requirements are for you to be able to qualify for the exempt status. Number one, you have to be 65 years of age or older, or you're legally blind, or you make less than $12,000 a year. So if you answer no to any one of these criteria, you do not qualify for exempt status. And if you want to read more about the qualifications, you can check out IRS publication 505. Because if you write exempt on your W-4 form, and you may get away with it, but if you are ever audited, you're going to have to pay that money back, plus you're going to be fined, and you could go to prison for up to a year. So why do anything illegal and unethical when in my econ we can teach you how to adjust your W-4 the legal and the correct way? Now, there are two main reasons why most people W-4s are filled out incorrectly. Number one, because you're not updating it every year, because you do have financial situations that change. And number two, most people believe that the W-4 is based on how many kids you have, when in fact the W-4 is based on allowances that you're going to be able to write off at the end of the year. And because of this lack of education, 8 out of 10 people are overpaying in their taxes. So you are legally required to file your taxes, but you are not legally required to pay taxes. And so you have to understand the power that you have, and you need to make sure that not only do you pay your tax liability, but you do not pay a dime more than you're legally required to do. So in discussing how to fill out your W-4 form, I'm going to use this example of the Johnson family. They are married. They're filing jointly. They have combined income of $100,000. The husband makes $45,000 and the wife makes a little bit more at $55,000. And the Johnson family has 2 children between the ages of 8 and 10. So what we're going to do is we're going to go to what I call the top half of the W-4 form, which is called the Personal Allowances Worksheet. So let's start right at the beginning, and we're going to go right into A. And A says, enter one for yourself. Okay? So we're going to enter 1 for A. Line B says, enter 1 if you are married and you file jointly. So we're going to enter 1 in line B. Line C says, enter 1 if you will be claiming and filing the head of household on your tax return. Now, I would like to make a note here. Head of household is a filing status on your tax return for people who are unmarried. Okay, so if you are married, you cannot file head of household. If you got a divorce, you have to be unmarried on the last day of the tax year. You can qualify for the head of household status if you pay more than 50% of the living expenses of the dependents that you have in your home. And we're not talking about if you're single. If you are married or you are single with no children, you cannot claim head of household. You have to have a qualifying person living in your house more than 6 months of the year. If you have a child who is in college, they are still considered a dependent. Also, a parent, where you are responsible for more than 50% of their living expenses, regardless if they're living in the house with you or they're living outside of your home, you still can claim them as a dependent and you still can qualify for the head of household filing status. Also, if you just pay child support, but your children do not live in the house with you, that does not give you the qualification of head of household. So again, if you are married, you can never file head of household. And if you are single with no children, no dependents, you cannot claim head of household. So in this case, this was a married couple, and because they are a married couple, they do not qualify for the head of household deduction. So on line C, they are going to enter 0. Now let's go to number D. Number D says, enter 1 if you are single or you are married filing separately and you only have 1 job. Then you can enter 1 in line D. Number 2, if you are married filing jointly, but your spouse do not work, then you can claim 1 in line D. Or if you are married filing jointly and your spouse do work, but your spouse make less than $1,500 in their job, then of course you can enter 1 as well in line D. Okay, so if you are single or you are head of household, then you can put 1 in line D. Now, in this case, this is an example of a family who is married, filing jointly, but both spouses work. So in this case, on line D, they cannot claim 1. So they're going to write 0. So again, if you are single with no children, then at this moment, you should have 2 allowances so far. If you are single, but you have children, which means you get the head of household status, then you should have 3 so far in allowances. So let's move on to line E, where we're talking about the child tax credit. So these are the dependents that are living in your home, or it could be a college student. Okay, so here's the first criteria. It says, if your total income is less than $69,801, or if you are married filing jointly. So if you're married filing jointly, if your income is less than 101,000, then you can enter 4 for each eligible child. So if you are single or you are head of household and you make less than $69,000, you can claim 4 allowances for each eligible child. If you are married filing jointly and your combined income is less than $101,000, then you can claim 4 allowances for each eligible child. Here is the second criteria. If you make more than $69,801, but less than $175,550, and you're single, head of household, then you can enter 2 for each eligible child. If you are married filing jointly and your combined income is over $101,401, but it is less than $339,000, then again, you can enter 2 for each eligible child. The third criteria that you can meet, if your total income as a single person or head of household is between $175,000 and $200,000, then you get 1 allowance per child. If you are married filing jointly and your income is over $339,000 but is less than $400,000, again, you can enter 1 for each eligible child. If your income as a single or head of household is over $200,000, you don't get any allowance for your child, for any child that you have. And if you're married filing jointly and you make over $400,000 combined, you do not qualify for the child tax credit. So what you're going to do in section E is you're going to find your income wherever your income falls. For this example, this couple are married filing jointly. They make less than $100,000. So they qualify for this first criteria. So they can enter 4 for each eligible child. They have 2 children. So on line E, they're going to write 8. So if you were a single mom and you have 2 children, well, guess what? You got 1 for yourself. You got 1 for head of household. You got 1 for being single with 1 job. And because you have 2 kids, you're also going to be able to claim 8. So that means that that's 11 allowances that you have just as a single person with 2 kids. Okay. So basically, if you're making less than $69,000 and you're single or you're head of household, you're going to qualify for a higher child tax credit. Line F is giving you credit for other dependents. So these are people who do not fit the criteria of your child. Maybe they're over the age of 17, but they're not in college. They may have moved out your house. They got their own, not moved out your house, but they're not in college, but they're living in your home and you're responsible for 50% of their living expenses. Or again, it could be a relative that you are taking care of. They qualify under this category. So once again, if you are single and you make less than $69,000, then you can claim 1 for each eligible dependent. So if you are a single mom, you have an adult child, they're not in college, but they're still living in your house, you still can claim them as a dependent and get some credits. Okay. If your income is between $69,000 and $175,000, then again, you can enter 1 for every 2 dependents. So that means that if you make more than $69,000 as head of household, or if you're married filing jointly and you make more than $101,000, then that means that if you only have 1 child, you do not get a credit for that dependent. But if you have 2 children, you will get 1. If you're head of household you make less than $69,000, you can claim one for each eligible child. So if you got 2 kids, you can claim 2. Again, if you're head of household, your income is over $175,000, you cannot get a credit for them as a dependent. If you're married, filing jointly, again, you cannot, and you make over $339,000, you do not get the credit for the dependent. So in this case, they do not have any other dependents that they are responsible for. So for line F, it is 0. Okay. On line G is going to be 0. And what you're going to do for line H is you're going to add up all of your allowances. And in this case, it is 10. Okay, so it's really kind of easy. The first part is really easy because you're just reading each line, and it's really based on your filing status and your income. Now, if you are single and let's say you don't have any children at all, well, what you will notice is that the highest number of personal allowances you can claim on this section is line A, where you'll get 1, and line D, where you'll get 1. So you only qualify for 2 allowances. Now, if you are adjusting your W4 and you're at 10 right now, then you can stop right here. You can stop right here, and you can complete your allowance sheet, turn that into your HR. But if you're in a situation where you have less than 10 in line H, then I recommend that you continue on to the second half of the W4, and I'm going to show you how you can unlock some more allowances. Now, the second half of the W4 gives you the opportunity to get more allowances for a number of different reasons. Number one, if you plan to itemize on your taxes, it may qualify you for an additional allowance. And that means if you itemized last year, if you did itemized deductions last year because you are a homeowner, then you may qualify for an additional allowance. The second claims to adjustments to income is business expenses and income. And that is where my econ is going to come into play to give you more allowances that you can qualify for. Now, what I do want you to understand is when it comes to reporting on your taxes, some people get it confused in thinking that in order for them to claim their business deductions, they have to itemize on their taxes. That is not true. You only should be itemizing, again, if you are a homeowner and you got interest and real estate taxes and things like that. You can take the standard deduction and still get your business write-offs at the end of the year, because your business write-offs are not tied to the Schedule A. Itemized deductions is on Schedule A. Your business income and expenses is reported on Schedule C. And Schedule C adjusts your income before you take a standard deduction or before your itemized deductions even hit your income. Another reason why you may want to do the second half of the W4 is if you are married and you are filing jointly and both of you are going to adjust your W4. Then you need to complete the second half of the W4 form. And another scenario is if you have multiple jobs. But what I'm going to say with the multiple jobs, whichever job that you make the most money on, that is the job that you're going to income shift on. And on that second job, just leave your W4 basically where it is at its original allowances, not including what your business would do for you. Okay, so you may have 10 on the job that you make the most money, but on that second job, just put it at 0. So let's talk about the additional allowances for those people who had less than 10 on the first half of the W4. So here's how you can get some more allowances. So let's start with number 1. It says enter an estimate of your 2018 itemized deductions. And basically what this is saying is that if you what's a good word for this? If you itemized last year and you go to your Schedule A, I believe it is a line that you actually will be able to write off for part 1. So I think it's line 29. Line 29 on your Schedule A. If you had itemized deductions, you're going to put that amount on line 1. Line 2, you're going to find your filing status and you're going to put your deduction here. So if you're married filing jointly, you're going to put $24,000 in line 2, which in this case, that is true. If you were head of household, you're going to write $18,000. And if you were single or you were married filing separately, you're going to write $12,000. Line 3 is that you are going to subtract line 2 from line 1. Now, in this case, line 1 is 0, which would make your calculation negative, which would be less than 0. So in this case, line 3 is just going to be 0. So the rule of thumb is, if you don't have a house, that means you didn't itemize. And so if you don't have a home, then for line 1, 2, 3, just skip it. It's 0. Fast forward to line 4. Okay, that's the rule of thumb. So let's talk about line 4. Line 4 is where you can qualify for different write-offs that's going to adjust your income at the end of the year. And so some situations where that can happen is your Schedule C, because you are in a business, you qualify for certain business write-offs at the end of the year, and you can use those expenses to offset and adjust your W-4 and offset your tax liability. Other situations is maybe you have a health savings account where they take money out your paycheck. Maybe you have certain qualified moving expenses. If you're self-employed like myself, we have to contribute to establish and contribute to our own savings account and retirement account. So if you actually contribute to a SIP IRA or a solo 401k, all your contributions up to $54,000, you can actually write them off on your taxes. You can get an IRA deduction. You also can get a deduction for student loans. These are some of the things that can adjust and lower your gross income, which can lower your tax liability. But what we're going to focus on, again, is the business deductions. And like I said before, your Schedule C is going to list all your write-offs at the end of the year. Now, with the new tax laws, the Schedule C has been replaced by the name of Schedule 1. So your tax preparer is going to fill out your Schedule 1 and they're going to attach it to your 1040. So here's how you can get some extra money. What we're going to do on line 4 is we're trying to come up with a total of what some of your business write-offs is going to be. So here is a rule of thumb. If you are brand new in my econ and you did not have a business last year, you did not have a Schedule C reported last year, and you do not have rent or mortgage or a car note, I want you to enter $4,150 on line 4. So basically what we're doing is you are getting one additional allowance, okay? Again, if you do not have any rent, if you don't have a mortgage, you do not have a car note, do not put more than $4,150 on line 4. Now, what I have created is a supplement worksheet to make it easier for you to come up with your deductions. And so for line 4, instead of you coming up with all the tax write-offs that you could qualify for, we're just going to stick to the top 3. And so here's what we're going to do. We're going to ask you for your rent or your mortgage payment. So whatever that is for the month, you're going to multiply that by 12, and then you're going to divide that number by 2. So for example, if your mortgage is $1,100 a month or your rent is $1,100 a month, times 12 is $13,200. You're going to divide that by 2, and the amount that you are going to put on your worksheet right here, your handout supplement worksheet, will be $6,600. Then we're going to go to your car note. So whatever your car note is, if it's $350, we're going to multiply it by 12, and that's going to give you $4,200. You're going to put this on the second line. And then finally, your third business expense that we're going to use in our adjustment total is your cell phone. So let's say your cell phone is $120 a month times 12. That's $1,440. You're going to put that on line 3. You're going to add all 3 of these write-offs together, and that comes to $12,240. So what is going to happen is on line 4, you are going to write $12,240. And when you get down to line 8, it is going to tell you to divide that number by 4,150. And when you divide this number by 4,150, you're going to get a number. And you always want to round up. So in this case, it's 2.9. So that is 3. So that means that you're going to get 3 additional allowances from the second half of the W4. And so I'm going to post this worksheet in the group so that you can have access to it. I'm also going to post this worksheet in the Lifestyle Changers training website. So make sure that you're in the Lifestyle Changers group so you can get access to that website and the password. So to go back for line 4, we're going to put $12,240 because that is the total annual rent payments divided by 2. That is the total car note payment for the year, and it is the total cell phone payment for the year. Those are only the 3 deductions that I want you to use for line 4. And like I said before, if you do not have any rent, you do not have a mortgage, and you do not have a car note, just put $4,150 in line number 4. Okay? So line number 5 says add lines 3 and lines 4 together. So we're going to bring the number down, $12,240. Line 6 is for those people who are heavy investors and you know that you're going to earn dividends, or maybe you're going to sell some stocks, or you have some investments that's going to be paying you out interest. You can put that amount here. For most people, it is 0. For this example, it is 0. Line 7 says to subtract line 6 from line 5. So what we're going to do, we're going to bring that number down again. So that's $12,240. Again, if you don't have any rent, mortgage, car note, line number 7 is going to say $4,150. Line 8 says divide the amount on line 7 by $4,150. And that is going to give you a number. Always round up. In this case, it is 3. Line 9 says enter the number from the personal allowance worksheet, the first top half that we had completed. And remember, we came up with a number. That number was 10. On line 10, you're going to add lines 8 and 9 together. It's 13. And now you are done. Okay, so even if you are, for most people, when they're head of household and they got 2 or more children, they can stop at the first half because they'll usually get to 10, and that's more than enough allowances to get extra cash back on your paycheck. For those people who have less than 10 on the first half, then I suggest that you go down to this bottom half, this deductions worksheet, and find additional allowances by using line number 4. Now, of course, if you have a home, that means you did itemized deductions the year before, you may qualify for additional allowance because your number in line 1 may be more than box 2. In that case, you'll be able to get a little bit more money, but if not, still you want to work with line 4. And line 4 is your rent, your car, and your cell phone bill. And you can stop right here. Now, I am going to go over the 2 earners section, and this is for people who are married, filing jointly, and you and your spouse both want to adjust your W4s. If only one spouse is adjusting the W4, then you can stop right here. So for those of you who are married, again, and you both want to file your W-4, okay, let's go to the two earners worksheet. Now, with the two earners worksheet, what you're going to do is, number one says, enter the number from the personal allowance sheet, line H, or the line 10 if you did the second half as well. In this case, we did. So on line number 1, we're going to write 13. Now, here's where it gets a little bit complicated, so you want to make sure that you pay attention. On section 2, it says, find the number in table 1 below that applies to the lowest paying job of the couple, and you're going to enter the number of allowances. However, if you're married filing jointly and the wages from the highest paying job is less than $75,000, then do not enter more than 3 allowances on line number 2. So let's look at the table. This is the table that is attached to the W-4 for the two earners worksheet. So remember, in this example, they are married, they're filing jointly, their combined income is over $100,000, but it is less than the threshold. So they're at 107, all right? Now, remember, the husband is making $45,000 a year and the wife is making $55,000 a year. So the married filing jointly table is right here. And it says, if wages from the lowest paying job, you're going to find it on this chart. So the lowest paying job is the husband, and he's making $45,000. So we're going to look on this schedule, and right here, between $43,501 and $55,000 is where the husband wages will fall. So in this case, it has 6 allowances. But since the highest paying job is less than $75,000, because his wife makes only $55,000, so that's less than $75,000, it says, instead of putting the 6 on line 2, do not put any more than 3. Now, if his wife made more than $75,000, then he's going to be able to put 6 in that allowance chart. But because she made less than $75,000, she cannot put any more than 3. Okay? So when you look at the table, it's 6. But because she makes less than $75,000, she can only write 3. So in box number 2, we're going to write 3. If she made more than $75,000, then box number 2 was going to be 6. Okay? Line 3. If line 1 is more or equal to line 2, subtract line 2 from line 1. It's 10. So this is going, and then you're going to stop. Stop right here. This is where you stop. And this is the number that you are going to claim as your total allowances on your job. Okay? So if line number 1 was 10 and line number 2 was 3, then line number 3 is going to be 7. And again, you stop. And you are done with the two earners worksheet. Once you have your total allowances, whether you just did the first section of the W-4 because you have kids and you already have 10 allowances, or if you had to do the second half of the W-4 so you can get additional allowances if you were less than 10, okay? Or if you had to do the two earners because you were married filing jointly and you wanted to adjust both W-4s, then whatever your total allowance is going to be, you're going to go down to your employee withholding allowance certificate, and on line 5, you're going to write your total allowances. On line 6, you're going to leave that blank. And on line 7, you're going to leave it blank. So as you can see, This is your total allowances on your employee certificate. You're going to fill out your contact information, your name, your social, your address. You're going to fill out how you're going to be filing on your taxes, whether you're going to be filing single. So even if it's head of household, you're going to check single. If you are married but withhold a higher single rate, so you're just going to be married, okay, single, or you're married. Also, you're going to sign it and you are going to date it. Now, keep in mind, up here at the top, it says separate here and give the W-4 form to your employer. Keep the worksheets for your records, okay? So do not give your entire worksheets to your HR department. Only give them the bottom half, which is the allowance certificate. Now, if you are retired and you have a pension or you are getting annuity payments, you can also adjust your W-4. It is called the W-4P. You will fill out your worksheet the exact same way you will fill out for a traditional W-4. And here is the allowance certificate. Again, you complete your contact information, put your total or number of allowances on line 2, sign and date. And again, at the top, separate here and give the W-4P to the payer of your pension or annuity. Keep the worksheets for your records. Once again, do not give HR your records, because that is your documentation and your proof of how you came up with your total number of allowances, okay? You only give them the bottom half of the section, okay? It is important that when you adjust your W-4, even if you decide not to adjust your W-4 and you just want to use your tax write-offs at the end of the year, it is important that you have accurate record keeping. And so again, make sure you have downloaded the Cash Flow Manager app to your phone. From this point forward, you are going to enter all of your business expenses and receipts into this software. Everything that you put into the software is what you're going to be able to write off at the end of the year. And because you're going to be able to take a picture of your receipt and the receipt is going to be stored in a cloud, now you're making yourself IRS compliant. At the end of the year, you're going to give this report, you're going to print this report out, give this report to your tax preparer, and they're going to fill out your Schedule C, better known as the Schedule 1, and it is going to be attached to your 1040, and this is going to be an adjustment to your income. So if you have expenses, and let's say you make $50,000 a year, but you got $20,000 in business expenses, it is going to adjust your income to $30,000, which means that you're only paying taxes on $30,000 instead of $50,000. And that is the beauty of having a home-based business tied to your income. So you want to make sure that you're tracking all of your expenses. Once you adjust your W-4, it is important that you open up a separate savings account, and you want to get your last payroll check so that when the W-4 has been processed and your new allowances take hold and you get more money in your paycheck, you're going to know the difference. So you're going to know how much additional cash flow you now have access to. But it is important that you open up a separate savings account and transfer that cash flow to a separate savings account. You don't want to mix the cash flow in your checking account, because you will find yourself spending that money. You'll spend it on getting your hair done. You'll spend it on clothes. You'll spend it on eating out. You're going to spend it on so many different areas, but not where it needs to be spent, okay? So if you want to make sure that you have your money sitting in a savings account that can pay you a little bit more than the national savings rate, then I recommend you go to nerdwallet.com, and it'll list all of the banks that have the highest paying out savings account. Ally Bank is happen to be one of them. And while you're waiting for your income shift to take place, make sure you go to the Lifestyle Changers team training website and look under the personal finance link and watch this Personal Finance 101 webinar. This is a boot camp that is going to show you how to direct your cash flow dollars to build your emergency stash, to pay off your debt faster, and to build your investment accounts. So it is so important that you use this money to elevate your lifestyle and get your financial house in order. This ends this presentation, and I will see you at the top.